Holy smokes everyone, boy it was another crazy day in the markets today. And boy do I have some news for you because things are changing rapidly. So in today's video I'm going to be going on how the banks like JP Morgan and Goldman Sachs are now coming out, like I've been expecting and like I've been warning, that the Federal Reserve is going to have to lift interest rates much more than 3 times this year. And we saw that this rattled the markets today. So I'm also going to quickly go over exactly what happened, all the action in the markets today. So let's not waste any time everyone. Let's get straight into it. Okay, so quickly before I go into JP Morgan and Goldman Sachs prediction, let's look at the S&P 500. You can see it fell at 1.5% today. We can also see the NASDAQ. It did at one point fall today over 2%. And Bitcoin for the first time in months fell below a key support level of $40,000. But for all my gold and silver investors, gold did hold steady up 0.2% today, and silver had a decent day up 0.47%. And something that did spook the markets is the 10-year US Treasury did go over 1.8% today. And it looked like somebody or some entity came in and started buying up the US Treasuries to cause the yields to go down. So could have that been the Federal Reserve, everyone? I don't know, but I think it may have been. They also must have called in the plunge protection team for the NASDAQ because it did regain its 2% loss today. But everyone, let's now get into what JP Morgan and Goldman Sachs is warning about the economy and what's going to happen with interest rates and how this will affect the markets. So look at this everyone, Jamie Dimon sees the best economic growth in decades and more than 4 Fed rate hikes this year. Now I know we have to take everything Jamie Dimon and these banks say with a grain of salt, but let's get into how probable this is. He's saying the reason this is going to happen is because we're going to have the best growth we've ever had this year. I think since maybe sometime after the Great Depression. He also says next year will be pretty good too. Well, why I don't agree with him there, I don't think we're going to see a crazy economic boom in 2022 with, like I've been talking about, with people's savings going down, with consumer debt at record levels. But hey, maybe his wealthy clients that have got huge gains in the housing market and equities are going to have a good year. But Diamond said growth will come even as Fed raises rates possibly more than investors expect. Goldman Sachs economists predicted 4 rate hikes this year, and Diamond said he would be surprised if the central bank didn't go further. This is huge everyone, because even though we're seeing weakness in the markets right now and we're seeing the markets fall, this is them trying to price in the 3 rate hikes this year. But like I've been warning, what if inflation doesn't go away? What if they have to lift interest rates much more than 4 times? And this is the question the banks are now starting to ask. Now, obviously, this would benefit the banks a lot if interest rates go up, because then their margins go up and their profitability goes up. So if you're thinking what stocks would go up when interest rates go up, bank stocks will. And this is his warning, everyone. It's possible that inflation is worse than they think, and they raise rates more than people think, Diamond said. I personally would be surprised if it is just 4 increases.
The market is different, Bertha, and the market can have its own fluctuations and unrelated to the economy. And I think you need kind of this kind of growth to justify the market. So, we're kind of expecting that the market will have a lot of volatility this year as rates go up and people kind of, redo projections and look at, the effective interest rates in businesses differently than they did before. Now we've got unemployment around 4%. The consumer's in good shape, business is in good shape. And those things are really good. The Fed, you could say they should have started doing QE a little bit early and stuff like that. But, if we're lucky, they can engineer a slowdown and you'll see inflation coming down. A lot of people project inflation to be 2.3% at the end of this year. I don't. I think it's going to be higher. But, if we're lucky, the Fed will slow things down and we'll have what they call a soft landing. I'd personally be surprised if it's just 4 increases next year. I think that 4 increase of 25 basis points is a very, very little amount and very easy for the economy to absorb.
Now you may think, well, if the economy is going to boom, shouldn't the stock market boom as well? What you have to know, everyone, is the economy and the stock market have been completely divorced. They're not correlated. Like what we saw in 2020 and 2021, when the stock market entered a recession, the stock market boomed once the Federal Reserve dropped interest rates to 0 and started pumping in stimulus. So the stock market now relies on 0% interest rates and stimulus more than it does a booming economy. And like I said before about bank stocks, they have surged so far this year as rates climbed. The KBW Bank Index jumped 10% last week, the best start to the year on record for the 24 company index. Diamond said that while the underlying economy looks strong, stock market investors may endure a tumultuous year as the Fed goes to work. if we're lucky, that's right, if we're lucky, the Fed can slow things down and will have what they call a soft landing. And we can see here as well, Goldman predicts the Fed will raise rates 4 times this year, more than they expected of 3 times. So what this simply means is, everyone, is looking like the mainstream media and the banks are starting to catch on, and they're finally starting to admit that inflation isn't transitory, and they're saying even if the economy does good, that means the Federal Reserve is going to have to lift interest rates much higher, and this is going to be very, very bad for the stock market. And like I said, if they have to lift interest rates, say 2% this year, well, that's when we'll see the stock market fall anywhere between 20 or 30%, because the market has to price in these high interest rates that have effect on growth stocks' future earnings. And also with inflation and rising interest rates, future earnings become less valuable. So everyone, it's looking like the markets are very shaky right now. We are seeing a lot of volatility return to the markets, but what do you think will happen with all this information? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.